afternoon, everyone, and welcome to today's enrichment session for paper, advanced audit, and insurance. My name is Joanne, the manager of learning support at ACCA, and together with me this afternoon is our ACCA tutor guru, Ben Wilson. He will be sharing his expertise on the paper with you shortly. Now, just a little bit on the housekeeping rule. We are opening up for Q&A throughout the session. So if you have any questions for Ben, you can just pop them in the chat box at the bottom right-hand side of your screen below. Now, before you send the message, just make sure you select to send to everyone so that others can see your message as well. All right, and Ben will actually address your questions whenever possible. Now, without further ado, I will now pass the session to Ben. Ben, the stage are all yours now. Thank you.
Good morning, everyone. Sorry, good afternoon. It's morning here in the UK. And welcome to this enrichment session for the AAA exam paper in December. So a little bit about me, first of all, and why ACCA are working with me on this session. So my background, I started my career working as an auditor at KPMG in London. My two biggest clients that I had there, one was the BBC, which was a really interesting audit, and the other one was a company called Swire Pacific that owns Cathay Pacific. And so I used to do a lot of work on that airline and the related services they provide. So I've got a lot of background and experience as an auditor. And then I moved into lecturing and teaching, and I'm now an examiner with the ICAEW. So I write the exam paper for the auditing paper there, the equivalent paper to this one for ACCA. I teach at an organisation called FME Learn Online. So I have a small group of students that I provide a personal coaching service for the AAA exam. I'm the ACCA's expert tutor for auditing papers, which means that lots of the free resources that you see on the ACCA's website, so things like marking exercises, exam debriefs, other webinars, I work with the ACCA to deliver those sessions. And the last year or so, probably the most interesting thing I've been doing personally is I now have a podcast for the AAA exam. It's available for free on Apple, Spotify, and other podcast platforms. I have about 5,000 listeners, something like that. But each episode is short, about 10 minutes, and it takes a real-world event and discusses it from a AAA auditing perspective. And it really helps to develop your exam skills for the long case study question. So if you don't already listen to the podcast, I would recommend doing so. It's free and really useful for your exam chances. So that's a bit about me. Today's agenda, what we're going to cover, we're going to just briefly look at the exam requirements. I'm sure you know them already, but just to make sure we're all starting from the same place, the AAA exam always follows the same format. So we'll just run over what that format is. We'll then look at the 4 or 5 biggest problems I think that there are with AAA, and give you some advice on how to overcome those problems. It's not a secret. The pass rate for AAA is really low. It's normally between 30 and 35%. In September, it was only 33%. And that's strange because if you think who is sitting the AAA exam, they've got through all of the technical papers up to that point. They've already passed lots of ACCA exams. This is not just a random group of people. This is people who already know how to pass, and yet only 33% of them pass the AAA exam. So we're going to explore why a little bit and give you some advice on how you can maximize your chances of passing. Then we're going to go through some key topics that come up regularly in the AAA exam, and I'll do a bit of a question debrief on each of those areas to demonstrate good practice for you. I'll then highlight a few free resources that are available to you after this session, and if there's any time at the end, we'll have a bit of a Q&A session. As Joanne said, as we're going through the session, if you type any questions in the chat panel, I'll try and answer them as we go. A little frustratingly, when I have the chat panel open, as you can probably see on screen, there's now a black box showing. So I will, I'll open it at points and then close it down again like that so that you can see the full screen. So the exam requirements, AAA is mega predictable. It always follows the same format. The first section of the exam, section A, is a big 50-mark case study question. You're generally given 4 exhibits about a company, a little bit of background, some financial information, its latest financial statements, or a draft of those. You're normally given some sort of briefing document telling you about specific issues the business has been facing. And then there's generally something to do with perhaps a phone call or some notes around an ethical issue as another exhibit. So you've got lots of exhibits and lots of information to get through. And one of the things that's challenging about that case study is you have to use information from all of those exhibits and bring it together to tell a coherent story. So in that 50-mark case study, there is generally a 25 marker, around 25 marks on audit risk. Now, occasionally it's not audit risk, and they will ask you about business risk and risk of material misstatement. But on at least 3/4 of the exam papers, 75% of the exam papers, it's audit risk that they're asking about. Then they'll ask you around audit procedures. So some of the issues the business is facing, some of the things you identify as audit risks, how would you test them as the auditor? That's normally about 10 marks in the case study. And there's normally around 10 marks on ethics, as I mentioned, drawn from that final exhibit. Something like a whistleblower may have been in touch, or there might be some minutes from a meeting with the audit committee where they're discussing an ethical problem. And there are 4 marks available for your professional skills. To make sure you pass the paper, you've got to pick up those 4 marks. They should be relatively comfortable to get. So if it's asking for briefing notes, that's the typical question. You have to have the right title. Briefing notes, 2 from date to pick the first mark. The second mark is for having a brief introduction, 1 or 2 sentences only. The third mark is for having appropriate subheadings throughout your answer. So not a subheading for every paragraph, but maybe, I don't know, 8 to 10 subheadings across your answer, so that it kind of is coherent for somebody to read. That's the third one, subheadings. And then the fourth one is for the clarity and professionalism of your answer. How well written is it? That one's a bit harder to get. The first 3 should be absolute home bankers. You should definitely get those. Okay, then in section B, there's generally a question that covers reporting in some context. So often audit reports, but it might be a report to those charged with governance. And then the final question, the other 25 marker, is on something else. It might be on a fraud investigation, for example, or it might be that we are doing some due diligence for a client and we have to review some forecasts for that client. So that final question is a bit less predictable. So what you can take out of that is, if you are brilliant on the core topics of audit risk, audit procedures, ethics, and reporting, brilliant on those, that's going to mean at least 75% of the paper you'll feel very comfortable on. And that's good advice, really. Make sure you're great on the core topics. Okay, these are drawn from my experience of teaching AAA and preparing students for the exam, looking at those who pass and those that don't, and also from my reviewing of the examiners reports that are released every 6 months from an ACCA. If you haven't read those examiners reports, I would strongly suggest that you do. Okay, first issue. I'm not ready for exam questions. I haven't done enough study yet. I'm not ready to practice exam questions because I need to learn the whole syllabus. The textbook, if you use the official Kaplan study textbook, it's about 600 pages. It's thick. And what many students do is spend their time learning the textbook. And unfortunately, that doesn't really work for AAA. I want you to imagine when you first learned to ride a bike, if you ride a bicycle, or the first time you learned to swim. Did you read a book about it? Did you read a book about how to ride a bike or how to swim? I bet you didn't. I bet you just got on the bike and tried and perhaps fell off, and someone who cared about you perhaps helped to pick you up and get you back on the bike. The AAA exam is a bit like learning to ride a bike. You need to do it through practice, not through theory. So my solution to this problem is that you need to practice exam questions from day one. We've got about a month left before the exam now, as we're currently at the start of November. The exam's at the start of December, and you should be spending 80% of your time from now, of your study time, should be practicing past exam questions. It's the experience of doing that helps you to improve. Okay, my next issue. Students always say this to me. I look at the examiner's model answers and they are massive and they are really technical. I can't possibly do, I need to write like that. To pass the exam, I need to write like the examiner. And the problem of this is that the examiner's answers are not written under timed conditions. The examiner spends weeks, months writing those answers. I know this because I'm the examiner for another body. And when I'm writing my answers for the model answers for the exam, I write my draft. They go to a moderator who adds comments in. It goes to an exam board committee who add more things in. And all of a sudden, the answer goes from being this big to this big. And it definitely is not written under timed conditions. There is no way you can write like the examiner does under the time pressure of the exam. And you do not need to pass the exam. I've taught several prize-winning students for this paper, and they don't, having reviewed their mocks and their work, they don't write like the examiner. Okay, so adjust your expectations. The solution to this is you see the examiner's answer as a reference tool. It's something to read up on, refer back to, and use for ideas perhaps, but be realistic and kind to yourself. If it is a, let's say in the audit risk question, generally audit risks are worth 3 marks each if you explain them fully. So for a 24-mark audit risk question, you need 8 well-explained audit risks. If you look at the examiner's model answer, it will have 15 in it. And if you try to write like that in the exam, you will definitely run out of time. And that's not an effective way to pass the exam. So my solution for you, or my suggestion for you around not writing like the examiner, is be kind and be realistic to yourself. You are not expected to write like that. And it's incredibly useful for you to get feedback on your own performance. So ideally, you would do that with a training provider that gives you lots of detailed feedback on your scripts. And that on my course, that's the main thing I'm looking to do. Or if you're not studying with a training provider, then something that's really useful for you to do is to get a study buddy and to swap scripts with each other and review each other's work and give each other helpful, kind, critical feedback. Okay, my next issue that I often have with this is my more conscientious students. They get the CAPLAN exam kit or the BPP exam kit. And so that's an official ACCA one. And then they say, well, to pass this, I need to work through every single question in here. And the problem is that volume isn't the answer. Quality is better. So you're better to do less questions and do them properly, do them fully, and reflect on your feedback rather than trying to just nail as many questions as you can. Because like this lady in the picture, if you try to do too many questions, you get bored, you burn out, and your the amount of quality that you get out of each question starts to fall. So my solution to this is, instead of just working hard like these people who are pushing the square boxes, work smart. And that means doing a selection of questions covering the whole syllabus. Yes, focus on the core topics of audit risk, audit procedures, ethics, and reporting, but do a selection of questions across those and a selection of questions that that cover other areas too. Don't feel like you need to do all 15 audit risk questions that are in the bank. The other thing is, this exam doesn't really repeat itself. So it's not like if you do an extra question, you'll see an audit risk in there that will then come up on your real exam. It's not like that. Each exam is new and bespoke and tailored. And so it's not like some previous exams you'll have sat where if you'd have seen that previous question, you'll remember what to write. That's not really what this exam is about. Just going to pause there in case there are any questions that have come in already I can deal with. Okay. Okay, nothing that I need to answer yet. Okay, that's great. So we'll move on with the presentation. Okay, my next issue, and this is a huge problem. This is, and the picture on there is time wasting. Now, what many students do is they have a look at the question and then they go, oh, that's hard. That's a difficult one. I know. I'll read the answer first. And I now read the answer and go, oh, now I know how to do that question. And then I have a go at doing the question. If this is describing you, please don't do that for AAA. It's a complete waste of your time. Rote learning of answers is not helpful for this exam because it is a problem-solving exercise. You have to develop your skills of being able to problem solve. Now, the issue of, if I see a question that I don't know how to do, I just look at the answer, is then when you come into the exam, the actual exam, and you turn to the question and you don't know how to do it, well, what skills have you developed to be able to cope? Well, no, oh, I'll look at the answer. Well, no, I can't because I'm in the exam. And so you can't rely on doing that in the exam, obviously. So in your question practice, and this is my solution, you have to see each question as a problem-solving exercise. It's like a Sudoku puzzle or a crossword. You're not supposed to know the answer straight away, but you are supposed to think about it and try to use the scenario to try to develop points that would be mark scoring. And through doing this in your question practice, you are training for the skill of being able to cope with a random question in the exam. Now, it's really obvious when I'm working with students who look at the model answers first, because then their answers, their actual answers, look just like the examiner's answer. And yeah, great. I mean, you've proved there that you know where to look for the real answer, but you haven't developed the skill of problem solving, which is absolutely critical for passing this exam. So if you forget everything else that I say today as advice, if you only take one piece of advice from today, let it be, do not look at the answers until you have had a full go at the question yourself, so that you develop problem solving skills. Okay, that's it for my main issues with AAA and how we'd overcome them in the real exam. I'm just going to pause here in case there are any questions at this point. I don't think there have been. That's great. So we're going to do a little bit of this audit risk because it comes up on every exam paper for 25 marks, unless you're unlucky and you get business risk, but that's unusual. We're going to do a bit of a recap of audit risk, and then I'm going to do a demonstration of best practice of how to approach an audit risk question. So audit risk. An audit risk occurs where there's been a problem for some reason in the accounts. So a number is misstated and the auditor misses it. There is a misstatement in the audited financial statements. Now, you'll get up to 3 marks. This is what the model answers, the examiner's marking schemes tell us. 3 marks per well-explained risk. But something that's quite difficult, and students often tell me is hard, is I don't know whether my risks are well explained enough to score 3 marks. So how do you get all 3 marks for your audit risk? The first is that you draw together pieces of information from different bits of the scenario. So you could be told that they are listed in the background information. And then we may be told later on in the scenario that there is some sort of target that some external financial target they're expected to meet. And then in the financial information, we might be given information about that target, or we may be able to do a calculation to support that target. And so a well-explained audit risk would bring out the fact that they're listed, would bring out whatever this target is that with public expectation to meet it, and then do the calculation to support it, to bring together those facts to tell a coherent story. Next, a good audit risk will bring in one of the 3 parts of the audit risk model. An inherent risk, this is the risk that a problem occurs in the first place. This is something about the company's trade or activities that put them at risk of a misstatement occurring. That's the first part. The second part, control risk, is that the company's systems don't prevent or detect the misstatement. And then the third part, detection risk, this is that the auditor misses it for some reason. And what a well-explained audit risk will do is state whether this is an inherent risk, a control risk, or a detection risk. A good audit risk will be really precise. It doesn't say profit overstated. It will say amortization expense understated. It doesn't say assets overstated. It says intangible assets overstated. So it's precise and it's detailed about which exact part of the accounts is misstated. It's also clear about whether the problem is that the number's too high or too low, under or overstatement. Now, if it's a general problem, you can say misstatement. So the number might be too high or too low, we don't know. But almost always in AAA, it will be obvious from the scenario whether the problem is that we think intangible assets are overstated or amortization expense is understated. So it's using the word over or under. It will include calculations, absolutely. This is good information for you. Generally, there are 3 or 4 separate marks available for a materiality calculation and comment. So calculating materiality as a percentage of PBT. So this issue is 14% of profit before tax, and therefore it's material. That will get you a specific mark doing that. And there will generally be up to 4 marks available for doing that throughout the question. Easy marks, make sure you get them. And this other calculations, well, this is for doing things like percentage changes. If they give you the revenue figures, if you calculate the percentage change in it and use that number to support your revenue audit risk, then you get a half a mark for that calculation. If you do more involved analytical procedures, there's generally a mark available for each one of those. So although this is a written exam, there are actually, something like 7 or 8 marks available for using this effectively to do materiality, percentage changes, and analytical procedure type calculations. This is the hard bit, and this is the bit where students often waste too much time. Now, you do need to know your financial reporting in the audit risk question. There will be generally 2 of the audit risks will rely on you knowing the relevant accounting standard. Now, if it's something like, if the audit risk is around capitalization of research and development expenditure, now we see that one, that's come up several times actually. So research expenditure should be expensed in the statement of profit and loss. Development expenditure should be capitalized and amortized over its useful life. And there's a judgment point. Where does speculative research expenditure, where does that become development expenditure? And there are strict rules around this. And if you know your accounting standards, you might be remembering the mnemonic pirate, that it's probable that we will we have an intention to complete it. It's technically feasible. We've got funds in place to be able to complete the project, etc. So there's several rules. Now, what a weaker student does is write out all of the rules, and they spend ages earning maybe 1 mark. What the better student does is just picks out the relevant parts of the rules to use in their answer. So if in the scenario, it tells us that the product is at the prototype testing phase, it's at an early phase of its development, then the relevant part of the accounting standard is technical feasibility. Technical feasibility hasn't been proven, and therefore we should not capitalize this expense. Now, the strong student uses the part of the accounting standard together with the fact from the scenario that we're at the prototype phase, brings the 2 together to tell a story and to conclude on the correct accounting treatment. But what the weaker student does is writes out the entire accounting standard, and it wastes loads of time. So be the strong student, just quote the relevant part. Okay, now I did mention at the start that sometimes you might be unlucky and you get business risk rather than audit risk. So I just wanted to briefly cover what the difference between audit risk and business risk is. Most of you will be asked for audit risks, and an audit risk has those 3 parts. Problem occurs because of the company's trade, inherent risk. Company systems don't prevent or detect it, control risk. Auditor misses it for some reason, detection risk. And if all 3 of those take place, we will have a misstated number in the accounts and the auditor is not aware of it. So this means if audit risk has occurred, the audited financial statements are materially misstated. And it means that we have given the wrong audit opinion. We might say it's an unmodified opinion. Tick. The accounts are true and fair and free from material misstatements. They're all good. But actually, there is a material misstatement in it and I didn't find it. And had I found it, I perhaps would have given a qualified audit opinion. Okay, that's audit risk. Business risk is quite different. So business risk is from the company's perspective, not the auditor's. So here we're talking about the business, the company. And so the emphasis in the way that we write our answers has to be really different. So we're trying to pick out issues that impact the trade or the performance of the company, things that will stop them from meeting their company goals. So I'll give you an example of the difference between an audit risk and a business risk. We might have a problem with one of our customers and they're not paying us. A big customer isn't paying us. This is the company. So the business risk with a big customer that's not paying is that we haven't got the cash. And therefore, we might not have enough cash to pay our suppliers and our bills as they fall due. That could impact our relationship with our suppliers. It could even impact the going concern status of the company. And we're going to have to spend time chasing that debt. That's a problem for the company. That's the business risk. The audit risk, what's the problem for the financial statements? It's that our receivables might be overstated because we might not actually get that money from the customer. So the audit risk is looking at what number in the accounts is wrong, receivables overstated, whereas the business risk is talking about, what impact is this going to have for my company as I look to continue to trade? Oh, I'm not getting the cash in. I might not have enough cash to pay my debts as they fall due. Okay, now as I said, about 3/4 of you will get an audit risk question, and the remainder will probably get a business risk question. But you need to be decent at both of them. And one little tip before we move on, you can take the same issue from the scenario and explain it as both an audit risk and as a business risk. It's just in the way that you explain it that you pick up the marks. Okay, so we're going to go through a question here. This is a past exam question on audit risk to show you good, or to demonstrate best practice for you around audit risk. Now, it's not a full question given our time constraints, but this is, this will give you a decent start into how to approach an audit risk question. I'm going to demonstrate an approach to an audit risk question here. This question is from the March-June 18 exam paper, which you can get from the ACCA's website. And I'm using the blank workspace on TestReach to work through this. It's really good practice for you to be practicing questions in the blank workspace, so you get used to how the word processor works. I try and do this for all of the practice questions that I do. So in an audit risk question, everything we do needs to be driven by the scenario. So it's important when you're reading through the scenario, then adding risks into your answer plan, and then having done your plan, you type it up. So let's go through this scenario and pick out some audit risks. What about in this first paragraph? Anything interesting? Oh, look here, they're a listed entity. That's going to drive audit risk. There's going to be more public interest in the results. And there's going to be potential for management bias to overstate the results because there is public interest. They want to drive up the share price and make the company look better than it really is. Especially when we look down here and we see that revenues are falling. Revenues fallen by 3.2%. I don't like to go on too much about each audit risk, but I want to have enough detail, and I need to be thinking about my training and with advice about how do you make it a better answer, or you include things like what kind of risk it is. It's an inherent risk, isn't it, this one? There's an inherent risk that management overstate results. That's where the misstatement might come from. Okay, what else are we told? Oh, lovely. A nice, obvious one. We've been recently appointed as the group auditor. So I'm a new auditor. So there's a few things that could go wrong here. I don't know about the opening balances. Actually, let's get some stuff in our answer plan. So my issues are that I don't have comfort over the opening balances because I didn't audit them myself. There's increased detection risk because I lack experience of this client. And it's hard for me to assess things like management integrity. Can I rely on their representations? Well, I don't know them. Lovely, I've got 2 audit risks and I'm only in the first paragraph. Let's go into this next paragraph then. So it tells me that I make sales in over 100 countries, with every company in the group located in the same country, with the exception of a foreign subsidiary. Okay. Fine, this is all just background so far. There's nothing that's worrying me here. This is all just normal. It tells me that the publishing activities can be categorized into 3 operating segments, each of which are cash generating units for the purpose of impairment reviews. Okay. Newspapers and magazines, academic journals, and books. And look, in these operating segments that are being reported here, well, those are the 3 segments. But look, they're product segments, not geographical segments. That might not be correct. This operating segment note might be misstated because I'm not separating out by geography. So at the minute, the operating segments are all product based, and my rule for operating segments, do you remember it? When you have to report separately? It's the 10% rule, isn't it? Now, are these correctly stated? Are each of these making up more than 10% of the total? So if I look at my revenue here of 153, just in my head, I can go 10% of 153. Well, that is 15.3. So all of these are more than 10%. What about on the assets? Total of 95. So 10% of that is 9.5. All of those are more than 10%. So it's been correctly applied to the products. But what about these overseas sales? Perhaps I should be reporting the sales in different geographical areas, particularly given I've got this foreign subsidiary. And that might mean that my disclosures are misstated. Okay, let's move down slightly. I'm just locking away information here about these different operating segments. Look, 2 of them are falling. Newspapers are falling and books are falling in revenue, but academic journals are growing. The business overall has contracted slightly. I'm just locking that away because up here we were told about these impairment reviews. So if I'm thinking about impairment reviews, I might need to impair the assets. Well, it's newspapers and books that could require an impairment, isn't it? Okay, down here, I'm now told during the financial year I invested in software which enhances and extends my digital publications across all operating segments. The total investment, which has been recognised as intangible, was $15 million, of which $5 million relates to purchased and $10 million relates to internally developed software. Okay, I'm picking out a couple of issues on this already. The first is around this 10 million of internally developed software. Okay, now why are there issues around capitalizing internally generated costs? Well, there are strict criteria, aren't there? I have to prove that the software is technically feasible, don't I? And up until the point that it's not technically feasible, I should be writing things off as research costs. Those costs should be hitting the income statement. So what they might have been doing is capitalizing costs that really should have been written off. Is this a big issue? Is it material? I always want to do materiality calculations. Well, 10 million versus, well, should I do it versus profit or versus assets? Well, yeah, it doesn't really matter. Pick one, right? But this affects both assets and profit. So versus assets of 95 million and versus revenue. Well, actually, I haven't got my profit figure. I've only got a revenue figure. So I'm going to have to do this against assets. What is it as a percentage of assets? Oh, it's 10.5% of assets. So it's a material amount. In fact, it's highly material. And if they have included things in there that they shouldn't have done, that would mean that my intangible asset is overstated and my profit would be understated. My operating expenses understated. So we're then told, according to management, implementation of this software has already led to significant increases in digital publications. So it's generating benefit. I like that. That justifies the fact they haven't impaired it, which accounts for 20% of group revenue. And we think everything's going to quickly grow. Yeah, they might be biased though, mightn't they? Within 3 years, they'll overtake hard copy publications across all operating segments. Oh, there's a hint there. All operating segments. It's used across all of them, all 3. Fine. And it says I don't need to do an impairment review on any of the 3 operating segments because they're going to grow in the future. Well, these numbers here are telling a different story. Newspapers and books are both falling. And so we might need to impair the part of this asset that relates to the falling segments. Let's get that into our answer plan. So they haven't done an impairment review. This has been the software is being used across all three segments, and there are indicators of impairment in newspapers and books because of the falling revenues. And so potentially they should have done an impairment review. It could be that this intangible asset is overstated. And that would also mean that my profits are overstated. I should have recognized some sort of impairment expense. Now, this is a longer question. We're just looking at an extract of it. So for this part of the question, we're now going to write up our answer. So my first point is that they are a listed entity. And that means there's a high degree of public interest in the financial statements. And we've got some management bias to overstate things. Revenue's down 3.2%, and actually we can add something into this. They didn't do the impairment reviews either. And we said this is an inherent risk. Okay, let's write this up then. So there's greater public interest in the results and scrutiny of performance by shareholders because they're listed. And there's potential management bias to overstate results to meet public expectations. And this risk is heightened as revenue has decreased materially by 3.2%. That's lovely there. Anytime there's something you can talk about how material it is, always do so. It picks you up some credit. And the lack of impairment reviews indicate that management may be biased. There's an increased inherent risk of misstatement. And as I am looking at that, thinking inherent risk, that's one element, isn't there, of audit risk. Control risk was the second one, and the third one was detection risk. The fact that they're listed, it could mean there's a higher detection risk because there's more rules around what needs to be of what needs to be reported, and a chance that the auditor doesn't know those rules. There's greater rules for a listed entity, and actually, when they're listed, we want to release the results more quickly. So I'm going to add a couple of bits into my answer here around detection risk. So detection risk is increased. There are more rules over what has to be reported and disclosed for a listed client. There's a risk that management make errors, that's an inherent risk, and the auditor misses the errors, that's detection risk. And a separate point, there's less time for evidence to emerge as there's pressure for results to be released quickly, increasing detection risk. So I've given quite a lot of detail here because you need a detailed explanation in the AAA exam. However, I haven't spent ages explaining it because this might be on the marking scheme, it might not. And I don't want to go on for ages and ages on each point because if it doesn't score, I'm wasting time. I want to get coverage of points with sufficient detail too. Tough balance that. Okay, on to the fact that we're a new auditor. So we said the issues here were around the opening balances, which we haven't audited ourselves, increasing risk that there is a problem in those opening balances and they form part of the financial statements. We said there's increased detection risk because I lack experience of the client, so I might not spot a misstatement if it has occurred. And it's hard for me to assess management integrity and place reliance on management representations. Let's write those points up. So the fact we're a new auditor, the opening balances and comparatives were not audited by our firm. Balances could be misstated, and the comparatives form part of the current financial statements. Detection risk is increased because of the lack of experience. The auditor is less likely to pick on errors. Misstatements may be overlooked. And management integrity could be hard to assess as the auditor lacks personal experience of dealing with the client, increasing inherent risk. Oh, my typing is horrible. Doesn't matter if you make a few typos. The markers are told in AAA to sort of try to make the best understanding they can of what you've written. So don't worry about little typos. Okay, those two came out of the first paragraph, didn't they? On to the detail then. The next one was around operating segments. At the minute, they're product-based into newspapers, books, and digital. They've applied the 10% rule correctly. Each product is over the threshold, so it's correct to report them. but we're told that they make sales in over 100 countries. So should they be reporting sales by geographical segment too? And if they should be, then the disclosures are misstated. Let's type those up. So all three of my current products make up more than 10% of assets and revenues, so it's correct to disclose each of these separately. Sales are made to over 100 countries with one subsidiary servicing overseas markets. It's likely to result the results of each geography should be reported separately, if any are greater than 10% of revenue, to enhance a user's understanding of the accounts. I think it looks like disclosures are misstated here. Lovely. On to the next one, which is this capitalization of internally generated costs of 10 million. We've said here there are strict rules around when you're allowed to capitalize and when you must or when you must not. You have to prove that the product is technically feasible. And up until that point, you should be writing off the expense rather than capitalizing. At that point, they're research costs, aren't they? So they should hit the income statement. This is 10.5% of assets and therefore material. So it looks like the asset may be overstated and the operating expense is understated. So strict criteria exist over the capitalizing of internally generated assets. For example, the technical feasibility of the asset must be proven. Some of the costs may have been incurred before technical feasibility was proven, so should have been expensed as research costs. There's an inherent risk that an error occurred here, and control risk that the company's systems did not prevent or detect it. The 10 million cost is 10.5% of assets, making it material by size. Intangible assets look like they're overstated, operating expenses understated. Great. Let's move on to our final point. No impairment review was performed. So here we said that this new intangible asset has been used across all three segments of the business, and there's indicators of impairment in two of the segments because they've got falling revenues. It looks like the asset might be overstated if impairment was required in those areas. And that means our profit has been overstated because we should have recognized an expense. Let's write that up. So this new asset is used across all three segments of the business. Indicators of impairment exist in books and newspapers as they have falling revenues. The intangible asset may be overstated if impairment is required. And actually I should add to that, they didn't do an impairment review. The lack of impairment in review increases this risk. Profits are overstated as an impairment expense should have been recognized. Great. And we are done with this question. Okay. I'm just going to look in the chat panel to see if there are any questions to be answered here. Is the recording available? Yes, the recording will be available. I've been asked, the question was downloaded and opened in Adobe. Are we able to do that as well in the exam, or can we only see it on the online platform? Haha, in the exam, you can't download the question and open it in Adobe. You have to open it and do the whole thing in TestReach, the practice platform software. And actually, in one of the questions we're going to look at shortly, I am using the practice platform. Okay. Sir, I would like to ask if there's limited points in the answer. For example, if it's 20 marks and we write about as many points as possible, or is there a limit to what we write? Okay, Sharon, thank you for the question. Now, the idea of writing about as many points as you can is dangerous. The reason being that this is 3 hours and 15 minutes, this exam. And generally, the audit risk question is the first question, and a lot of people do that question first. If they follow your approach, Sharon, which is to write about as many as they can, what that student often does is spends much too long in the first question and then runs out of time. And the problem of that is that there are generally easier marks available later in the exam paper. This is one of the things that, so when you do your training as an examiner, one of the tricks they teach you about to write into exam questions is that you have a spread of the easier and harder stuff and front load some of the more difficult parts to test students' ability to manage their time and put easier bits towards the end. And it's something you see in lots of exam questions. So the problem of doing what you're suggesting there, Sharon, which is writing loads on audit risk, is that you run out of time in the rest of the paper. So if it's 20 marks for audit risk, you should be aiming to write about 6 audit risks or maybe 7 audit risks, because there are 3 marks available per well-explained risk and additional marks for things like materiality calculations and also for your percentage changes and that sort of thing. Thank you for the question, Sharon. Mood has asked, do we need to mention which standard we're using on every treatment? No, this is another problem of the examiner's answers. The examiner's model answer will always write the correct accounting standard out, IAS 37, and then write the name of the accounting standard, provisions, contingent liabilities, etc., etc. And it's not worth any marks. It doesn't score you anything. So don't waste any time writing out the name of the standards. If you can't help yourself, then write IAS 37, but don't put anything more than that. And you do not need to write the name of the accounting standard at all. You'll notice in my my answer there on that was talking about research and development expenditure, I'm not talking about the accounting standard at all. I don't quote it. You don't need to score marks. Yin Yen has asked, is it each point carries 3 marks for the whole paper? No, it's not. So generally, audit risks, 3 marks. Business risks, 2 marks per well-explained risk. And everything else on the exam paper is normally 1 mark per well-explained point. Now, sometimes they give 2 marks per well-explained point. But so in something like ethics. But the problem is you don't know that when you are writing your answer. You don't know whether it's 1 or 2 marks per well-explained point. And so you have to assume that there's 1 mark per well-explained point and work on that basis. User 1, do we need to memorize the name of the ISAs? No, you do not, user 1. That's a question I just answered. Yeah, so don't. Okay, thank you for the questions. We'll move on to our next section, which is, ethics. Okay, ethics comes up on every exam paper. In fact, it's on every ACCA exam, not just the AAA exam. So you've seen ethics tested again and again and again across all of the exam papers that you've done to date for ACCA. Core topic, the reason it's in every exam paper is because it's something that the ACCA see as absolutely critical to the mindset of a professional accountant. So things you need to know around ethics. It normally comes up for up to 10 marks. Sometimes it's 8, but typically 10 marks. And typically it's the final requirement in the case study question. So to succeed in the ethics question, you need to know the ethical principles and the threats to objectivity. You need to know them. They're necessary, but they are not sufficient in their own right. Okay, so the ethical principles and threats. You need to know the principles, confidentiality, so keeping your mouth shut unless there's a good reason to do otherwise. Objectivity, no bias. Professional competence, only doing work that you are qualified and experienced in doing. Integrity, which is honesty plus, so it's going beyond just not lying and being demonstrably ethical and honest in your business relationships. And professional behavior is the catch-all. Professional behavior is not doing anything that could bring the profession into disrepute in any way. So you need to know those and know the definitions of them. You also need to know the threats to objectivity. These ones are probably more important actually for AAA, more important than the ethical principles. So self-interest, self-review, familiarity, advocacy, management, and intimidation. You need to know all of those and know a little bit about each one. So for example, when self-review comes up, you don't actually get a mark for saying self-review. You get a mark for explaining why self-review threat exists in this situation. So the auditors will be reviewing their own work in some way and being specific about what that work is. And then going on and saying things like, we'd have less professional skepticism because our colleague prepared the work. We would accept it as correct without robust challenge. And we might be less willing to highlight errors in that work because it would reflect badly on our company, on our firm, because we did that bad work. So the marks aren't for saying self-review, they're for explaining the self-review threat. And this is my final bullet here, in the context of the question. So if you find yourself in the ethics question, typing lots of stuff that you have just memorized about each of these threats, stop, because there won't be much credit for doing that. What a good answer does is uses the scenario information to explain why a familiarity threat exists in this particular scenario and develops why that's an issue for the business. Ethics should be the easiest area of this paper, right? Because there's nothing new to learn. All of the technical knowledge you have been examined on several times in the past by the time you get to AAA. But it's generally not very well answered. And the reason it's not well answered is that each scenario is very different. Each scenario is bespoke. So it isn't just, oh, spot that, therefore I write this particular phrase. You have to respond to the threats in the scenario in the context of the company. So we're going to see doing that with a demonstration video now. Oh, we'll just see there's a chat panel question. Joshua has asked, does not mentioning the principles being compromised lose us marks? Or mentioning the threats and safeguards is good enough? It's a really hard question to answer that, Joshua, because sometimes you do need to mention the ethical principle. So for example, if we're taking on a new client and we also work with one of their rivals, then we would need to be talking about confidentiality, because there's a risk that commercially sensitive information could leak from one company to another via the auditor. And so that would be a confidentiality issue, which is one of the fundamental ethical principles. So you would have to talk about it there, but you'd have to use the scenario to add depth to it. What is it about this particular scenario that makes that a big risk? And absolutely, the question will often ask you for what should the auditor do about it? So what actions should the audit firm take? And there you would be suggesting safeguards, like getting the informed consent of both parties in writing, having separate teams working on the two audits with information barriers in place to stop information leaking between the audit teams. So I know it's a long answer to your question, Joshua, but you do need to discuss the principles in context and suggest relevant safeguards, because it often asks you for issues and actions. Okay, hopefully that answers your question. Thanks, Joshua. Right, on to demonstrating technique with ethics. So here we are in the September 18 paper, and this is question 2. I've navigated to this already. Now, question 2B is the one we're going to do. So let's get the requirement on screen to start with. And we're asked for ethical and professional issues in respect of the audit of Turner Co. and to recommend any actions taken by the audit firm. Now, I like to open the word processor first of all, and then I like to copy and paste the question requirement into the word processor so I can use it to do my answer plan. And there are 2 questions here, aren't there? I've got a comment on the ethical and professional issues, first of all, and then I need to recommend actions taken by the audit firm. And this is 8 marks overall. I'm just leaving that in there to remind me that I need to make 8 points. Now I've captured the requirement, I can get rid of it and I can bring up the relevant exhibit. Now, having captured the requirement here,
I want to go through the background information, the scenario information, and see if there's anything important around Turner. And it's this paragraph here that's relevant to Turner, isn't it? And it's a listed financial institution offering credit facilities to both commercial and retail customers. Okay. So anything relevant in there? Yes, the fact that they're listed. Now, I don't quite know where that's going to come into my answer yet, but I'm definitely going to get that in because the fact they're listed means that there's slightly different rules, aren't there, around the ethical standards required, more public interest. So that's just come out of the scenario. I'm definitely going to use that. Now, we've got this email from the audit supervisor. It talks about that. So let's get the email from the audit supervisor up. Oh, it looks like there's two issues in here, doesn't it? Firstly, around this loan, and secondly, around a secondment. So let's deal with each one in turn. The loan, first of all. One of the team members, so a junior, is taking out a loan to finance the purchase of a domestic residence. The loan will be secured on the property, and the business manager has promised this audit junior that she will get the very best deal that the bank can offer. Okay. Now, the fact they're listed, I don't know if that's like relevant here, really. Perhaps that's going to be relevant in the second one. So let's deal with the first issue. So, what's the issue with this loan? Well, relevant facts. She's been offered the very best deal. That sounds a bit dodgy, doesn't it? So that very best deal seems like she's getting some sort of favourable treatment. It doesn't seem like it's at arm's length. It might be the normal loan that they offer, because we are told that in the original scenario that they do offer loans to individuals. So perhaps this is in the normal course of business. But the issue is here that if she's getting a great deal, it could give her a self-interest threat. The reason being that she'd want to not uncover anything too dodgy, don't want to hunt too hard, lack of professional skepticism. She wants a smooth audit so that she gets that deal. Now, the rules are that she is allowed to take out this loan if it's at the kind of normal rate that the bank offers. And also, it's worth noting that, but if it's at a kind of favourable rate, then that's not okay because it will give the self-interest threat. It's also worth noting that she's a junior, and so might not have that much influence over the course of the audit. It's not like she's the audit partner. So what should we do then with this loan to the audit junior? We need to work out if it is at the kind of normal rate. And how would we do that? Oh, yes, we might want to review the loan documentation. We might want to think about if it's not at the normal rate, we might want to rotate, take her off the audit team, basically. And I'm now thinking, I'm looking at the way I'm structuring this answer and thinking it might make more sense to deal with the loan, ethical issues, and then deal with the actions. Might make more sense to deal with one issue than the second, mightn't it? Okay, there's an answer plan for the first question. It's 8 marks, and so I want sort of 4 mark scoring points out of there. I think I've probably got enough. Not trying to write a perfect answer, trying to get enough to pass the question. On to the second issue then, which is the secondment. Right, we still haven't used this fact that they're listed yet, and I think that is going to be important here. So let's read through this secondment stuff. So the audit supervisor has been asked to provide a member of staff on secondment to work in the payroll department. Payroll manager has struggled to recruit a new supervisor and wants to assign a qualified member of staff for an initial period of 6 months. Now, if we're working in payroll, these numbers are going to be included in the financial statements, aren't they? There's going to be a self-review threat. The numbers for payroll are going to be in the financial statements. I'm going to be less critical. I'm willing to highlight errors, and I'm probably going to demonstrate less professional skepticism. I'm not going to review as hard. So if I find a problem, I don't want to shout about it, and I'm less likely to look hard for problems. I've also got a potential management threat. because I could be making decisions or judgments that management should be doing. Now, the fact that they're listed does make a difference here. It's prohibited for me to provide these sort of services for a listed client. So I'm going to have to decline this work. Now, I don't just want to decline because I want to maintain relationship with this client. I'm probably going to want to explain the reasons to management. Kind of trying to be practical and commercial, explaining why I can't because it's prohibited by the ISAs. Lovely, we've got an answer plan there. Time to write it up now. Right, let's write these up then. I've just resized the screen so you'll be able to see it better. The very best deal, suggesting it's favourable and not at arm's length, although it is in the normal course of business. I'm probably going to combine these three together. So I've written those first 2 points up. Background, making loans is the normal course of business for Turner, which is relevant. However, the very best deal suggests that favourable treatment is being received. The transaction is not at arm's length. Let's write up the next 2 points then about self-interest and Jeanette benefiting personally. So self-interest that could arise. Jeanette is personally benefiting from preferential treatment by the client. She may be more willing to overlook issues that arise during the audit so that she obtains her favourable loan. My last point, though, was that actually she's a junior, so she might lack influence. It would be different if she's an audit partner. Okay, got enough there now. So the actions, I want to see if it is at the normal rate, and if it is, we're okay. And if it's not, we probably want to get Jeanette off this audit. So I'm going to obtain the loan documentation and see if it's at the normal rate offered by the bank. I do that by comparing to typical loans that they make. If it isn't the normal rate, it's okay for Jeanette to continue working on the audit and obtain the loan. A reasonable third party would consider this to be in the normal course of business. If it's not at the normal rate, though, I want to rotate Jeanette off the audit. If it is at a preferential rate, I want to get Jeanette off this audit and review/reperform any work that she has done on this audit. Notice the spelling mistake. I'm not worried about that. It's obvious what I'm typing, and so I don't need to change it. Save time. So the secondment then, the issue here is that the company is listed, and this is therefore prohibited by the ISAs unless it's a trivial piece of work. And payroll is unlikely to be trivial, isn't it? So why is it a problem? It's self-review, isn't it? Because the payroll figures will be reflected in the financial statements and are likely to be material. And explaining that a bit, we're unwilling to highlight any errors in the work because it would look bad on us, and we're likely to look less hard, less professional, skepticism, because we'll take the work at face value because we did it. Okay, so I've been unwilling to highlight these errors, and I'm going to demonstrate less professional skepticism. I'm more likely to accept those payroll figures as correct because I created them. I've also got a management threat, haven't I, that I might be making decisions and judgments around payroll, and that should be the role of management, not the auditor. So the management threat, I might make decisions and judgments whilst I'm doing the payroll work, and it should be management that make those decisions. So my actions here, I'm going to decline the work because it's prohibited by the ISAs and explain to management and maybe offer them some advice on getting help elsewhere. Lovely. So I'm going to decline because it's prohibited by the ISAs. I'll explain it to management and offer them some advice on how they can recruit a suitably qualified member of staff. So have I got enough here for 8 marks? I mean, I've got easily enough, perhaps even slightly too much there. So I'm pretty happy with that as an answer.
Okay, hopefully you found that useful as me going through that question. Something, before I look at questions in the chat panel, something that's just struck me that is really worth highlighting to you here is that the thrust of that answer was the scenario. I took matters from the scenario and I ran with them and dropped in things like self-interest, self-review, management threats, rather than the starting point being the threat and then supporting it with things from the scenario. The scenario drove my answer. And that's what you've really got to look to do in the ethics question. Really use the scenario and squeeze it for relevant information. So I'm just going to the chat panel, see if there's any questions on here. So Tingy has asked, if the requirement does not require us to provide a safeguard or recommendation, will we still get marks by providing safeguards? So Tingy, I can answer that one very easily. No, they will only give marks for things that have been asked for. So if it doesn't ask for safeguards, don't write any. It's a really common problem in AAA that students answer the question they want to be there or the question they expect to be there rather than the question that's actually been asked. Probably the most common place that happens in the exam is in the audit risk question. Students very often suggest actions for the auditor or audit procedures in the audit risk question. And unless they're asked for, they don't score marks, even if they're the best procedures you could possibly imagine. Because they weren't asked for in the question, they'll score you nothing. Wong Yong has asked, what is the meaning for the professional element in the exam question for ethics and professional? Any exam technique on it? Yeah, what it's getting at, Wong Yong, is that don't be constrained or restricted by just the fundamental ethical principles. So an example of something that would be a professional issue would be if we do have two clients in the same sector, then saying something like we've got a bit of a conflict of interest. We don't, it's hard for us to act in the best interests of both of those clients who we're advising because they're competitors. Now, that isn't one of the fundamental ethical principles, but it is a professional issue. So it's something that's just a little bit wider than just the narrow ethics stuff. So exam technique on it, for me, it's not being constrained by going, hold on, that isn't self-interest or self-review, and therefore I can't write it. I respond to the scenario and write anything that I think is relevant in the context of the question. That's how I get the professional bit. Tingy said, okay, excellent. User 1, materiality calculation generally required for the question audit risk / risk of material misstatement. Yes, it is. And also for matters to be considered. Yes, it is. User 1, my advice to you would be any time they give you revenue, profit, and assets in the scenario information, they are expecting you to use that to do materiality calculations. And if in doubt, do them anyway. Okay, I know I said earlier, only do things that answer the question directly, but as an auditor, materiality is relevant to everything that you do. So if it's possible for you to comment on the materiality of an issue in any question, then I would do so. You're welcome, Wong Yong. Emily Lim has asked, so does audit procedures related to assertions or audit risks? So audit procedures are kind of things that the auditor needs to do, actions for the auditor. Very often in question 1, it will give you, you go through and do the audit risks, and then separate question, it will say, like that one we did earlier, the related question there is, what audit procedures would you do over research and development expenditure? And the assertions, so things like completeness, existence, valuation, all of those things, they're really, well, they're kind of related to both, but I would be talking about them more with the audit procedures. So I would say I would inspect the title deeds for the property to confirm ownership, rights and obligations. So I talk about them more in all procedures, but in the audit risk, the audit risk is that the receivable is overstated as it doesn't exist or overvalued. So they are relevant in both, but I tend to use them more in my procedures. But yeah, relevant in both, Emily, is the answer. Okay, next question. I'm just getting to. Mufeng has asked, related to calculations, I always can't do the calculation for analytical procedures, as in the examiner's answer. Is there any key area I need to pay attention to? Okay, Mufeng, I've got bad news for you. In the last webinar that the examiner gave to the senior tutor group, the examiner talked a lot about analytical procedures. Talked about it loads. And I took that as quite a big hint that the examiner sees analytical procedures as being quite significant. It was a pretty obvious hint given. And so I think it means they're quite likely to be tested a lot in the coming exam sittings. So Mufeng, you need to get good at them, would be my answer. My approach with analytical procedures is to try to keep them simple if I possibly can. So doing things like, percentage changes in revenue, that's an analytical procedure. Revenue's increased by 8%, but in the scenario, it tells me that we've lost lots of clients. These things don't add up. How can revenue have grown when you've lost lots of clients? It suggests that revenue is overstated. Now, my calculation there wasn't really very detailed. It was just a percentage change, the analytical procedure. The ones that are more involved, what they'll tend to do in the audit risk question is give you some financial information about the client, sales, costs, assets, and what have you. And then underneath it, it will give you some other information, like number of clients, for example. And what you've got to do is look at that other information you're given, like number of clients, and go, what am I supposed to do with this? Well, if I've got number of clients and I've got revenue up here, I could do revenue per client. So revenue per client each year and saying how that has moved. And that again might give you an indication that the numbers that we're given don't really tie in with the narrative information. So if it tells you that in the scenario that our customers have been buying less from us, but then in your analytical procedure, you do revenue per client as a calculation and how it's moved. If we're told that the customers are buying less, but revenue per client is increased, it would tell you that it looks like perhaps revenue has been overstated because the numbers do not tie in with the non-financial information. Oh, sorry, I meant to. User 1 has asked, analytical procedures calculation only required when a question is asked for it? No. Analytical procedures are very relevant in two types of scenario, always relevant. So they're always relevant when identifying audit risk. Even if it doesn't say including analytical procedures. The reason being that analytical procedures are a key test for the auditor, or key step for the auditor when you're understanding the business and picking out audit risks. So always relevant in audit risks, always. And analytical procedures are also relevant as an audit procedure. So doing a substantive analytical procedure, looking at things like payroll expense per employee as an indicator of the payroll number being right or wrong, is relevant as a substantive audit procedure. So they're always relevant in audit risk and audit procedures questions, even if they're not asked for specifically. User 1, hopefully that answers your question. Aslina has asked, sir, for the answers, I don't need to answer it on one whole paragraph. Aslina, it's like you're watching my answer and thinking about it. Love it, Aslina. You'll see the way that I write is quite spaced out, isn't it? The reason I do that is because I'm thinking about the most important person in the world to me when I'm writing my exam answer. And that person is the marker. If I present my answer spaced out, it makes it much easier for the marker to pick out the individual points that I've written. And therefore, I'm making it easier for them to give me marks. I strongly encourage you to do the same thing as Lena. If you are writing big blocks of text like this, they are awful to mark. So I would recommend don't write big blocks of text. You want, short, punchy paragraphs. That's the ideal. Xiying. Is it also necessary to include ratio calculations for analytical procedures? Yes, ratio calculations are an analytical procedure. They are Xiying, but I try not to do any calculations that take me too long. So I like to keep my calculations simple. My favorite ones are just doing percentage changes in things. But if I am going to do a ratio, something like gross profit margin, operating profit margin, those are very relevant as analytical procedures. They are. I just don't want to do any that take me too long to calculate because I don't want to waste time on them. There's normally enough marks, Xiying, and actually this is a really good message. There's normally lots of marks on AAA for doing easier things. So picking all of those easy marks is a really effective way of scoring 55%. If you try and do really detailed technical calculations, difficult things, it wastes you more time and probably not worth it. Okay, Kong Weng has asked, could you suggest any area we should be focusing more for the computer-based exam? I mean, the number one thing for the computer-based exam is that you are practicing questions in test reach on the ACCA's practice platform. So you'll see the question that's showing on screen at the minute, that is in test reach. There are 6 full exams loaded up into test reach for you to practice. So 3 practice exams, specimen, and the latest 2 exam papers are all loaded into test reach. So I would be doing all of those in the software to practice your technique. I mean, it's basically a bad version of Microsoft Word and a bad version of Microsoft Excel. But because they're not as good as Word and Excel, it doesn't have all of the functionality that Word and Excel have. It's simplified so that it works as an online platform. This isn't a criticism of ACCA, it just is. It's a fact. It's a simple word processor and a simple spreadsheet calculator tool. You need to get used to using them. And that means practicing using them. Depending on who you're training with, Kong Weng, the better training providers are now putting their own mock exams into test reach as well. So my course, I have 2 full mock exams, extra ones, which are in test reach to give my students more practice of the software. Okay, you've asked, is there any limit for marks to be given for analytical procedures? Yes, and this is really annoying, but we don't know what that limit is. It's generally 3 marks, maybe 4 marks, but we don't quite know how many. What you can't do, Ewan, is just I don't know, do 20 analytical procedure calculations. You only score, actually this is relevant, you only score marks for an analytical procedure if you use the number as part of your analysis. So just doing a little table of analytical procedures and nothing else won't score you any marks at all. You have to use the numbers to support your explanation of an audit risk or whatever else that it is. But yes, there is a limit to the number of marks, generally 3. Valerie, how to answer an ethical question? That's exactly what we just did in that scenario. So you start with the scenario and you run with the information in the scenario and you make sure you answer all parts of the question. So comment on the ethical issues and then the actions. Is transnational audit in the syllabus user 1? Yes, it is. So us being the group auditor in one country and the company having subsidiaries businesses that it owns in different countries that are audited by different auditors, absolutely that is in the syllabus. Yes. It's not a core part of the syllabus, so I wouldn't worry about it too much, but yes, it is in the syllabus. Okay, in the interest of time, I'm going to move us on to our next section. Great questions. Thank you. There will be more time for questions as we move through. So our final technical area or key topic is around audit reports. And I've chosen this because audit reports are very commonly tested. Section B of the exam. So two main types of questions that come up on audit reports. So the first one, criticize a draft audit report. Here we're given an extract from an audit report and we're asked to comment on it, critically evaluate it, which means it's going to have some problems in it, and our job is to explain what those problems are. That's the first type of question. The second type of question is we're given little scenarios and we've got to evaluate the audit work that's been done, so kind of quality control, and then say, based on what we're told here, what would the impact be on the audit report? So what kind of opinion would we give? What kind of extra paragraphs would we have to include in the audit report given this extra information? Audit reports, the latest version of my podcast is talking about audit reporting at Tesco, the big international retailer. So if audit reports is something you want some extra stuff on, then I would be having a listen to that edition of the podcast. Okay, so for a question where you're asked to criticize the draft audit report, I approach these questions with two thoughts in my mind. The first is that I'm going to look for obvious issues, and then I'm going to look at the detail of what I'm told in the audit report and kind of get into the depth of it to pick out kind of bigger issues. So the kind of basic points that we see coming up time and again where we're given a draft audit report, the first one is that paragraphs will be in the wrong order. The audit opinion, instead of being at the top to emphasize its importance, will be somewhere down the bottom. The next kind of thing is there may be a paragraph that's missing. So underneath the audit opinion, you should always have the basis of opinion paragraph, which explains why this audit opinion has been given. That's in the basis of audit opinion paragraph. Now, if you're given an extract that has the opinion and then doesn't have the basis of underneath it, you know there's a missing paragraph. And another thing, they'll often use the wrong headings. So I don't know, the audit report, instead of being addressed to the members of the company, it will be addressed to the directors. Now, to be able to pick out these basic points, you need to know what a good audit report looks like. So something that's very useful for doing that is getting a large listed business. So Tesco, I know it's a UK company, but it has a really decent audit report. Have a read of it so you know what's supposed to be in there. Looking at real ones is very helpful for this. And then going into the weeds a bit more and looking for more advanced points. So things like, based on the information I'm told, they may have given the incorrect opinion. So they may be describing a material and pervasive issue, which if it's material and pervasive, then the audit opinion would either be adverse or it would be a disclaimer of opinion if it's material and pervasive. But the audit opinion might just be qualified rather than being adverse or disclaimer. So I'm reading the information and looking at the opinion and going, does it all fit together? It might be that the disclosures that are given are insufficient. So in the basis of qualified opinion paragraph, they've not given enough detail to explain why that opinion's been given. And very often, they'll have used the wrong extra paragraph. So emphasis of matter, other matters, material uncertainty over going concern, key audit matters. Those are the four main extra paragraphs. You need to know when each of those are used, because in the exam question, they'll be using one of them incorrectly, almost always. Okay. If it's this, the second type of question where we're asked for what's the impact on the audit report of a particular issue, first thing I'm doing is writing a little summary of the scenario around what's happened. The next thing I do is I say what type of issue it is. Either it is a disagreement, so a material misstatement, or there's a lack of evidence. Those are the two types of issue. I then talk about how big a deal it is. It's either not material, it's material, or it's massive and it's material and pervasive. I then say what type of opinion it should be, either a qualified opinion because it's a material issue, a disclaimer because it's a material and pervasive lack of evidence, or an adverse opinion where it's a material and pervasive material misstatement. I then discuss whether any extra paragraphs are required. So emphasis of matter, material uncertainty over going concern, maybe other matters as well. Okay, and that's my approach. So we're then going to look at a past exam question here, again in test reach to demonstrate good technique around audit report questions. So here we go. Here we are in the practice platform. Really good practice for you to be doing all the questions in here as part of your exam preparation. And we're looking at practice exam 1 here. This was the actual exam from September 2018, by the way. And we're going to do the question on audit reporting, which is question 2. So I'm going to navigate straight there. And it's part A of this question. And I always like to have the requirement open and also have my word processor open so that I can plan my answer in the word processor. And we're just going to do the first bit of this question, the issue around the lease. So I'm going to copy and paste my So I'm going to copy and paste the requirement into the word processor because it's going to form my answer structure. There are several things I'm asked to do. So first one is recommend and explain matters to be discussed with management. And then I've got to do an assessment of their individual impact on the financial statements, and then the impact on the auditor's opinion if they don't make the proposed the proposed adjustments. So I've set myself up an answer plan. I'm going to put these in bold. I wouldn't really do this in the real exam, but just so it's easier for you to follow what I'm doing. So that's my first stage. I'm then going to use the information in the scenario and also in the preamble to generate points for my answer. So in the preamble, first of all, this is the information that we're given about the company to start off with. Is there anything in here that's going to be interesting for my answer? So I'm auditing one of my clients. The auditor's report is due next week. Nothing interested yet. Ah, that is interesting. They're an unlisted company. And that's going to be useful for me around the audit report because that drives the kind of things that are going to go into the audit report. I won't need a key audit matters section, for example. They operate from 7 geographically distinct sites. That might be useful as well. I don't know yet, but it could be. It turns out that actually becomes relevant in a later part of the question, but we don't know that at this point. Then I've got my schedule of uncorrected misstatements. So let's open that up. And I'm going to have it alongside my word processor answer so that I can plan whilst I'm reading through the schedule of uncorrected misstatements. Okay, first thing I'm told in this paragraph, these are the schedule of uncorrected misstatements, and the draft financial statements have some figures in here. Oh, lovely. They're going to form the basis of materiality calculations. Let's get those into my general planning bit of my answer. Then I'm given a schedule here where I'm told some stuff about this lease, and the lease has been debit asset and credit
lease liability. And I'm just getting my head around that before I go any further. That's the adjustment that has been suggested. Debiting an asset, well, that increases the value of the asset, doesn't it? And crediting a liability increases the value of the liability. So that's what has been suggested as the misstatement. Oh, and the size of it is 475,000. And while I've got the number in my head, I'm going to do my materiality calculation. Should I do it versus profit or should I do it versus assets? Well, if in doubt, do both. But this one, because it is only impacting the statement of financial position and not profit, it's probably more relevant to do it versus assets. It's 2.2% of assets, and therefore it's material. Let's go into the scenario information then around this lease, and we'll see what the issue was. So, all motor vehicles over 3 years old are required to undergo an annual safety test of their roadworthiness. This test requires specialist testing equipment, which is inspected by government officials. Okay, so far I've not found anything that exciting. Then there were some inspection visits in March, and the government inspection report required us to replace the testing equipment at 3 of the sites. Okay, so I've had to buy some new equipment, fine. Oh, and I didn't buy it. I leased the new testing equipment from a leasing company on a 6-month lease. Oh, and I'm already thinking, what, lease 6 months? That's a short-term lease, isn't it? I have to, and I'm just using my own knowledge of the financial reporting standards here, I have to capitalize the lease as a right to use asset if it is more than 1 year. Oh, I'm told there's no option to purchase the equipment. So that again suggests that this is a short-term lease, that it is not a capitalized one. It's one that I perhaps should be expensing in the income statement as I have the lease payments, rather than capitalizing the asset and having a long-term liability. So it does look like these are a short-term lease, really. It tells me the testing equipment was made available on the 31st of March, and I have capitalized leases with a carrying amount at 625 grand at 2 of the sites, but I've elected to take advantage of the exemption not to capitalise short-term leases at the largest of the 3 sites. Oh, so I've been inconsistent. And one of the kind of fundamental principles of making the accounts easy to understand and for a user of the accounts to be able to understand what's happened in the financial statements is that similar assets are treated in the same way. That inconsistent treatment is not allowed. Okay, and so what I've suggested is that the 475 grand related to the site that has not been capitalized, well, that should be treated in the same way as the other leases. So that sounds right to me. I've done the correct thing as the auditor. So the impact on the financial statements then, I've already said that it's material. And the impact of this at the minute, well, it's an impact on assets and liabilities, isn't it? There's no impact on profit because this is all stuff that happens on the balance sheet or the statement of financial position. So what's the impact on the auditor's opinion then if they don't make these proposed adjustments? So I go through my stages, my steps here, where I've already discussed the issue. I'm now going to say what type of issue it is. Is it a misstatement or is it a lack of evidence? This is a misstatement, isn't it? I disagree with the accounting treatment that management have followed. How big is this? Well, I've already said it's material, but is it going to be pervasive? Is it impacting just one area of the accounts, or is it so isolated, or is it more widespread, affecting lots of different parts of the accounts and therefore having a much bigger, wider impact? I'm going to say it's material but not pervasive because it's isolated to just these assets and liabilities, or one asset and liability. So the impact on the opinion then is that this will be a qualified except for opinion. I'll expand on what that means when I type out my answer. Now, this question just asks about the auditor's opinion, so I'm actually finished here. But if I'm following my process of wanting to think of wider impacts on the audit report, I'll also think about other paragraphs. And I wouldn't have any extra paragraphs, but what I would have is a change to the basis of opinion paragraph. It becomes the basis of qualified opinion paragraph where I explain this issue. Lovely. That's this answer planned. So let's now write it up. So my first point was around the fact that it's a short-term lease, a short lease. So because it's a 6-month lease, that's less than the full useful life of the asset. It's a short lease, less than the full useful life of the asset. It can be categorized as a short-term operating lease. The second point, capitalize right to use asset if it's more than 1 year. We'd have to do that if it's more than 1 year. Now we're told there's no option to purchase this, so it does seem like a short-term lease with the correct accounting treatment to be not to capitalize it. But management do get the option to capitalize it if they deem it a longer-term lease and they decide they want to account for that. That is allowed. So there's no option to purchase and it's a short-term lease. It's likely that the correct treatment would be not to capitalize. However, management can deem the asset as a right to use asset if they so wish and capitalize it. Now, my final point here, and this is the killer one, isn't it? Inconsistent treatment is not permitted. You have to treat all of the assets in the same class in the same way to make the accounts more understandable to a user. Okay, so inconsistent treatment is not permitted. All assets in the same category must be treated in the same way to make the accounts more understandable to a user. Cannot treat 2 leases as right to use and 1 as short term. I just want to expand on that a little bit and say what they need to do then. Either capitalize all 3 or none of them. Okay, so the impact on the financial statements, we said it's 475 grand, assets and liabilities both understated. It's material because it's 2.2% of assets. So let's write that up in a way that we'd need to in the exam. So the error of 475 grand is 2.2% of assets, making it material. Assets and liabilities are both understated. There's no impact on profit. The issue is confined to the statement of financial position, and you are okay to use abbreviations like SFP. So impact on the auditor's opinion. This is a misstatement. We disagree with management over the treatment here. We've said it's material by size. We've done that calculation, but it's not pervasive. It's isolated to just this particular asset. It's not more widespread. So it's a material by size, but it's not pervasive. The issue is isolated to the single lease and doesn't impact the financial statements more widely. Lovely. So we're giving a qualified except for opinion. The accounts are true and fair and free from material misstatement except for this single issue. So it's a qualified except for opinion. The financial statements are true and fair and free from material misstatement except for this isolated issue. And this extra bit here, which you would do in a normal question about audit reporting, is not required here because we're specifically asked about the audit opinion, but I wanted to show you it because most questions you would go on and do this. So a basis of qualified opinion paragraph should be included after the audit opinion describing the issue. Lovely, and we're done.
Okay, this is not a perfect answer. What I try to show in all of my debrief videos is a strong answer that is achievable for a strong performing student. I like to show a kind of 80–85% answer. You know, if you want the full perfect answer, you look at the examiner's answer, but it's not been written and planned in the time available. This was planned and written under timed conditions by me. And looking at this and going, oh, I haven't followed my own advice a bit. Here, where I'm talking about assets and liabilities being understated, hopefully you picked it out as well. I shouldn't say assets and liabilities. I should say the specific asset. So it is property, plant and equipment, or this is the asset, and the liability is the lease liability. So it's it's a short-term liability, isn't it? It's because it's going to be payable within the next year because it's 6 months. So it should be short-term liabilities, lease liabilities. But anyway, it's not perfect. I could definitely have improved it there. Right, let's look at questions that are coming up in the chat panel. Does anybody have any questions about this ethics scenario that this audit reporting scenario that I just went through? If you do, please feel free to ask them now before we move on from this question. I'll just give people 30 seconds or so to type. Okay, Wong Yong has asked, what's the difference between the impact on the audit opinion and the impact on the audit report? So the audit opinion is one section of the audit report. So it's just asking about the specific impact on the opinion, just that part of the audit report. But the audit report is massive. The one I was talking about for Tesco earlier runs to about 5 pages. There's loads of other stuff in the audit report rather than just the opinion. So it's things like extra paragraphs, emphasis of matter, other matters, material uncertainty over going concern, and key audit matters. That's a critical one for a listed company. Those are the extra things in the audit report rather than just the opinion. Mufeng has asked, for the group company, do we need to separate the impact on the component and the group? Mufeng, it's hard to answer that question. You need to look at what the scenario is asking. Normally, it will ask you specifically about impact on the group audit opinion, for example. But if it doesn't, if it just says on the audit, then you would need to talk about the component and the group. The 3 questions that we've discussed are in the same paper, 2018. Yin Yen, I think they are actually. Yeah, I think they are. Ting Yi has asked, what goes into an other matters paragraph? Okay, other matters is an issue that is fundamentally important to a user of the accounts, and it has been correctly treated by management, but it is something that is not in the financial statements, not in these financial statements. So I'll give you an example of an other matters type issue. If it's a subsidiary company that reports under local financial reporting standards, so let's say it's a UK company that reports under UK GAAP, these financial statements have been prepared under UK financial reporting standards. But let's say that the parent company reports under IFRS. In the subsidiary company audit report, you would have an other matters paragraph saying, user of the financial statements, you need to know that these results, this company accounts get consolidated into the group accounts of Tesco PLC, and Tesco PLC reports under IFRS, whereas these accounts are under UK GAAP. So it's highlighting an issue that has been correctly treated, but not to do with these financial statements, to do with something else. Okay, so Tingy, other matters is not a critical extra paragraph. The ones that are more interesting and more normally tested are emphasis of matter, material uncertainty over going concern, and key audit matters. Those are the ones that you see coming up more often in AAA. Tingy, thank you very much for the question, much appreciated. Okay, I'm going to go on to our final, I think I've actually just got a closed slide here around other questions. Oh, sorry, free resources that I wanted to highlight to you. So I'm just going to get rid of the chat panel for now. So just highlighting a few free resources that are available to help support you in your exam preparation through to December. So I've already mentioned it a couple of times because it is really useful. I get lots of messages from students who haven't studied with me at FME, but have listened to my podcast and found it really, really useful. So I would strongly recommend listening to it. So on Spotify, it gives me data about who listens to my podcast, and actually Malaysia is my #2 country outside of the. So I've got UK as my #1 country for listeners, and then Malaysia is my #2. So actually, I think quite a lot of you are already perhaps listening to it. But if you haven't, they're short, bite-sized episodes that take a current world event and discuss it from an audit perspective. And they're useful for a kind of subject recap, and also very useful for building your skills of analysis for the case study type question. So strongly recommend listening to it. It's free and it's very useful. ACCA Malaysia are putting on another webinar for you that I'm going to be delivering. This one's on the 17th of November. Joanne is going to send out an invitation for you, but this one is more focused on marking and how the exam is graded. So that will be very useful for you to attend on the 17th of November. Watch out for an invitation from Joanne. And the other thing that's useful for you to do is to link up with me on LinkedIn. So if you look Ben Wilson AAA, that's how you'll find me on LinkedIn. And to encourage you to do so, and maybe this might be helpful for you, I'm going to be running a competition next week to give away a free mock exam, and it's going to be, and so that mock exam is written by me. It's on Test Reach. You'll have it marked with full detailed feedback, and you'll get a full video debrief of each of the questions. And I'm going to be giving away a free one of them next week. So link up with me so that you get a chance to win that free mock. Okay, that's the end of the formal part of the presentation. We've actually been taking questions all the way through the session, so you may already have asked your questions, but if you haven't, there's now a chance. My podcast, Union has asked, when I release a new episode of it, I normally put it on LinkedIn, but the best place to find it is on Apple or Spotify or wherever else. Mufeng, you're allowed to bring a calculator into the exam? Yes, you are. Yep. There are some rules though about what calculator you're allowed. One like this is fine. If it's one that allows you to have a load of saved notes in it, then it's not fine. You're very welcome, Union. Does anybody have any further questions before we draw the session to a close? How would current issues be tested, Joshua? Great question. So how they're tested in two ways. First one is that they just build it into a scenario. So current issue around data analytics, for example, and the use of data analytics in the audit. There's an ACCA technical article on it, and several recent questions have built it into the scenario in the case study question. That's the best way that they test current issues. But sometimes they have a specific 6 to 8 mark question that talks about a recent exposure draft, something that is being published as a technical article. A recent one was on the mindset of a professional accountant and how it's, professional skepticism is not enough. We need to be more active than that. So not being passively professionally skeptical, but having an inquiring mind. Now that one, they could test it as there was a recent exposure draft published on professional skepticism. Can you summarize the impact of that exposure draft on the audits of listed businesses? So sometimes I ask a question like that, not as often. So the main way they build it into a scenario, but sometimes they ask you specifically about the current issue. Chunzeng, are you allowed to use short forms in the exam? So general advice, Chunzeng, is that if it is a very common abbreviation, like SFP for Statement of Financial Position, that's probably okay. If it's one that you are abbreviating to save yourself time, then it's not okay. If in doubt, write it out in full and then put in brackets. So I don't know, those charged with governance, TWCG. Maybe write it out in full the first time, put in brackets TWCG, and then use TWCG all the way through. Zunarain Zaini, sir, any suggestion for free resources on accounting standards, short videos? Okay, the best free resource that is out there on accounting standard is Tom Clendon's podcast. So if you look for Tom Clendon, I'm going to just type his name into the chat panel. So Tom Clendon. If you Google Tom Clendon, he's got a great podcast, and he also has some YouTube videos as well explaining accounting standards. Okay, Emily Lim has asked, any techniques when writing about going concern? I mean, it's a big question, that, Emily. Going concern can come up in lots of different places in the exam. I would be, if it's a really significant audit risk, then I'm kind of developing my audit risk to say that it could impact going concern. And when it does come up, I've got some pre-prepared things I can always write about going concern. You know, if the accounts are supposed to be prepared on a breakup basis rather than going concern, it means that all assets and liabilities become current rather than long term. And we have to write down our assets down to their kind of resale value. But yeah, Emily, going concern is a huge topic area that they build into a scenario-based questions. So it's something you need to be comfortable with. Mufeng, theory questions. How to answer theory questions concerning ED if I don't know what the question is about. Mufeng, can you just clarify what you mean by ED? I think maybe you're saying executive directors, but I'm not sure. Can you ask another question, please, Mufeng? Li Shan has asked, syllabus changes about ISA 315. So there is a technical article on the examiner's website, on the ACCA website about these changes to ISA 315. I read the whole thing and go, I can't really see how you're going to examine anything very differently as a result. So for me, Li Shan, it doesn't make too much difference. The two bits that are emphasized, one is data analytics as a way of identifying audit risks. And the other one is around use of analytical procedures. Both of those just tell me they're more likely to build data analytics and analytical procedures into a scenario-based question. But I don't see any significant changes really, Li Shan. Oh, exposure drafts, Mufeng. Okay, sorry, I should have got that. So how do you answer theory questions concerning exposure drafts? Right, you've got two options. One is you memorize the whole exposure draft, and that's all of the ones that are on the ACCA's website, technical articles. That's going to take you ages, and most exams don't test these exposure drafts. So I don't do that. What I do is I have a little summary of each of the exposure drafts, maybe 3 or 4 relevant points out of each of the exposure drafts that are in the technical articles, and I memorize those so that if it comes up, I can quote some relevant parts from the exposure draft. But yeah, Mufeng, if you try and memorize the whole thing, you're spending too much time doing that for something that's only going to come up for a few marks. Okay, we're a little bit over time, but I think we've had lots of useful questions as we went through the scenario. Thank you for all of your attention for today. I look forward to interacting with you on LinkedIn, and yeah, have a listen to my podcast. You'll find it very useful. So thank you, everyone, and I shall see you again, hopefully, on the 17th of November. Thank you. Have a lovely day, everyone.